Happy Tuesday, everybody. Hope you're having a wonderful, wonderful day. I am Sweet Bobby and glad to have you along. Joe is new today. So, hey, Ken, hope you're doing well. Ken, I hadn't heard your voice in a while. You didn't talk yesterday. You okay?
I'm alive and well.
Good. Are you feeling better? I mean, everything's good.
Oh, that's yesterday's news.
I got you. I got you.
Is yeah, I was just going through some detoxing. Most people think it's with drugs and alcohol, but it's my body was purging itself of poisons. I've cut my medications in half, and everything's great. I feel good.
That's awesome, Ken. And how many times have y'all probably thought to yourself, Bobby is a raging alcoholic? Y'all probably think that about me all the time. And I promise I'm not. I just wake up late and hop out of bed. I'm in my underwear wearing a spam cap, cap trading. So anyway, glad
You're retired, man.
Yeah, I'm retired. I'm living the life. So Stacy, hey Jason, we'll stay after today. Short ball, welcome in. Joe here for the first time, and Jim, good to see you today. So hope everybody's doing really, really, really well. So if you are joining us for the first time, let me just tell you a little bit about me. I am the worst trader on the planet. Never listen to a single thing that I do, but believe it or not, I was much worse than I am today. So that's the major thing. I've seen fire and I've seen rain. I've seen sunny days that I thought would never end. I have lost over $24,000 in a single day in the markets. It humbles you. So I grew up in a little town called Ranburne, Alabama. I graduated in a class of 48. I was school president and the valedictorian. So then I went on a music scholarship and an academic scholarship to Jacksonville State University, where I got my major in finance and minor in economics. I was fortunate enough to land a practicum. It was one of my classes while I was at Jacksonville State at the United States Bankruptcy Administrator, where I served for over 20 years. Then my boss came into me one day and said, Bob, you're doing really, really well at your job. I got the good news and the bad news. Good news is your performance review, you're all excellence. He said, bad news is you have maxed out on your pay. I said, maxed out on my pay? I said, well, that ain't good. I got 5 kids. So then I decided, well, I'll go and get my master's degree and try to put in for something else. So I got my master's degree in, human environmental sciences from the University of Alabama, Roll Tide, and with a concentration in personal financial planning and counseling. And I parlayed that into still working with the United States courts, where I worked with the 11th Circuit Court of Appeals in Atlanta, Georgia, for just over 4 years. Until this last year, we were on COVID, we're working from home. And then it came time for them to say, hey, it's time for us to go back. And I said, crap with that, I'm going to retire. During the 4 years I worked with the 11th Circuit Court of Appeals, I decided I was in the school mood. I was doing my master's, and I said, man, since I'm at it, let's just go for a PhD. So a friend of mine was his son played football at the University of the Cumberlands in Kentucky, Williamsburg, Kentucky. And then he later served as a graduate assistant for the football team. And someone just told me one day that they had a good PhD program. So I spent 4 years working on my PhD, got that, in May of this year. So now I'm kind of Dr. Bobby and retired and living the life. So, how do you retire when you're, 50 years old? Well, we've made good decisions and we made bad decisions. Trust me, I made every bad decision in the book, but we made a lot of good decisions too. One of the things that I did is I didn't live beyond my means. Well, now, trust me, there was a time when I did, but I finally, learned that was not the way to do it. I went to a Dave Ramsey seminar once and read a couple of his books and got out of debt, except for the house. And, life was pretty good. And the only thing that Dave didn't tell you is how to, he tells you how to get out of debt, not necessarily that he tells you how to make money on the side with your side hustle. And I realize that most of y'all are Probably not doing trading full time. Am I doing trading full time? Well, I did some wonderful research. I'm a scientist at heart. And in February, March of 2020, I was experimenting with the black swan hedge. And I tell you the story time and time again, me being in my podiatrist office with my phone while they're about to cut off my toe because I'm eat up with the diabetes and my hands are shaking. And I said, Doc, you got to give me a minute. Now, it was not shaking because they were about to cut my toe off. I was shaking because my portfolio was up 208% on the events of March 2020. So that allowed me to go ahead and start a hedge fund, which I do manage. Really, though, it's a lot of hands off management, as most of my accounts are. So I decided that I have the heart of a teacher and love to teach. And so I thought I would contribute back to society by helping others and trying to build a community where we could all support each other. So that started out with me charging $50 a month, which was really good because I bought some lights. Y'all helped pay for my lights. That kind of helped, brighten me up a little bit. I got a nice little microphone. See this? And, and I pay for Zoom every month and a couple of little trading packages that help us to all work together. So I set up in my own office to help y'all. Well, after about 6 months, I realized, I don't want to charge y'all $50 anymore because I don't need your money, and I'm here to help you. So, and I hope, so many people in education are not there to help. So, am I the Greg Maddux of baseball when it comes to trading? Oh, heck no. Am I Greg Maddux? No. Maybe I'm more like, what's his name? Pascual Perez that played for the Braves. You remember who was the guy that played for the Braves? He couldn't find the ballpark. I mean, it'd be his time to start. And, they'd be like, where's Pascual? I think it was Pascual Perez. And Pascual would not show up because he couldn't find the ballpark. So that's more like me. I'm not I'm not Hank Aaron. I'm Pascual Perez. So, but what you see here is what I do live. And you see me make money and you see me lose money. And we don't trade paper accounts around here. If you start trading paper accounts, all of a sudden you get so excited that you're God's gift to trading that you think you got it figured out. Then you start doing it and you realize that you don't. So let's just talk a little bit about psychology today. Now, here's the thing about trading, y'all. You're going to see fire and you're going to see rain. Oh, I've seen fire and I've seen rain. Good old James Taylor song. We ought to play that sometime. So keep in mind that we try to keep ourselves grounded outside of trading. And I know you are all eager and exciting to trade and to make money and all that, but you got to have a good foundation outside of your trading life, right? You got to have harmony with your family. You got to have wonderful relationships with friends. Those things are all important. So you hear me talk endlessly about my 5 kids, all of which are adopted from age 16 all the way down to 5. And they'll be in school starting Tuesday next week, all 5 of them for the first time in big school. So Beth and I will be taking 1 day a month and we won't have any classes at all. And so I think Ken, I hadn't asked you about this, but definitely we would love to see, Ken did so well while I was on vacation. Ken, we would love to see you, to present some in my absence. So I think that would be awesome because we're going to take 1 day a day since I'm retired and all the kids in school, just spend the day together. So when you talk about trading, you need, relationships outside of here. Don't stare at the screen all day. Don't make this your life or your obsession. Now, it is my obsession, but you got to tame it with other things, and those are relationships outside of trading. That's with family. That's with what do? I've got farm animals. Just got 2 donkeys. I got chickens, ducks, goats, hogs. Dogs, cats. I saw Rick post his animal yesterday, his little rescue kitty, which was really, really cool. Email me the dates. I will, Ken. We'll try to figure that out, 1 day a month so we can go out and do something. So you have all these things going on outside of trading. And then what's another thing that helps me? Y'all know how much I love music. And that's why 30 minutes before a class, we always play tunes. Now, if you don't like country and you don't like Southern rock, it's probably not going to, be the best for you. My favorite musician is Elton John, and I played Elton John for about 6 months straight. And I figured some of y'all were tired of that, so I've been moving into some other things. But music is a wonderful, wonderful thing to do while you're trading, right? So set you up a Pandora or a Spotify or Amazon Music account, get you a playlist going. And while you're sitting there trading, listen to some good music. It relaxes you. Oh man. And then just enjoy the things of life, going to the beach or enjoying the water, sitting at a lake, being outside, sitting in your swing. My swing is my refuge outside where I can go and watch the kids play and watch the animals roam. And then we talk about food a good bit too, right? Food is a very, very important part of everything that we do. I mean, we've got Dwayne making salmon on Thursdays. We talk about the good ribeye steaks. Oh, by the way, Piggly Wiggly's got them on sale. The ribeyes go off today. So we need to pick those up so we can go enjoy a good ribeye steak. So we talk about everything here. We talk about life, liberty, love, family, finances, just a lot of stuff. And I don't have the answers to everything. But one of the comments that I got today, and I won't say who said this, but let me read it over to the side because I think this is important. I think you'll like this. Hold on, let me find it. All right, here we go. The comment was this. Good morning, Bobby. Have you ever had a time when the wind is out of your sails as far as trading? Oh, heck yeah. Heck yeah. Definitely. Do I wake up some days and go, oh man, my account's down $2,000 today, and it's just the market's crashing. It's down 1%. Oh, my wind's out of my sail. I don't feel like I can do it anymore. I've got a small account. I feel like I should just quit. I'm just not good at this. Okay. So, yeah. Do I feel that way sometimes? Yes. Do I feel grossly inadequate on many days? Yes. But this little thing of trading, y'all, is not for the faint of heart, right? Think of everything that you've pursued in your life and all your accomplishments. The most difficult thing that you will ever do is try to become a well and seasoned profitable trader. Now, getting a PhD is difficult. Let me tell you something, 124 pages of a dissertation on a black swan hedge with all the research I had to do. Oh my gosh, there were days I wanted to quit. But even though that is difficult, it ain't as difficult as trading. Trading is difficult. So you cannot let this little thing that we do, watching little graphs and doing all this thing, you cannot let this totally control your life. At the same time, you can't come into the market and be scared to death either. You cannot come here and a point of fear and trade scared. Scared money is lost money. If you're trading scared and you're trading not to lose, you're going to lose. You got to come in here with a good attitude. That's why you've got your relationships, you've got your stuff outside of trading that you're focused on. And you come in here and you go, hey, I can only do and I can only trade what the market gives me today. So as the wind's out of my sail, oh yeah. But I try to be optimistic. Right? We sometimes, I don't want to, be a Bible thumper or thump you over the head with religion or anything like that. But we all look in some way or another to a higher power. I do, right? I'm just old country Bobby going to the Bowden Baptist Church, right? And one of the great joys is our Sunday school class. I'm in the special needs class. Now, don't laugh about that. We go into a class with special needs children that are there. And some of the adults that have special needs children are in there. We just have a groovy old time talking about our struggles, what we go through in life. So, and then we'll dig into the Bible, share a word, and you've got a life outside of your trading. Your trading cannot be your God. So you've got to be grounded outside of trading before you actually come in here, let loose and go, man, this is it. I'm a trader. We're going to make this happen. Yeah, but what do you have outside of trading? Because if this account were to go to zero today, if this is about a $50,000 account, if this account goes to zero today, guess what? I'm going to be a little upset, but I'm going to move past it. I am not trading scared in this account or in any account that I have, because I have gone through, made every mistake possible, lost $24,000 in a day. We've done all that, and it's just not my God. Trading is not my God. So you got to have something outside of this. Now, be glad that you are engaged in the study of the financial markets. There is nothing more fun. I love this stuff. Oh my gosh, I just love it. And I hope you love it too. So we try to have fun doing our trading. We try to keep it in perspective. It is not the only thing. And there is so much for me to learn. There's so much for you to learn. And we never get to the point that we think, man, I've got this down. I have got it. Because by the time you say, I have got it, the market will beat you down and humble you. The market has one thing in mind, and that one thing that it has is to chew you up and spit you out and take your money. And trust me, there are people on the other side of your trade willing to take you down and to take your money. So what we're going to do is try to figure out some ways that we're going to keep them from beating you down, taking you down. I mean, not that we're not going to have losses at time, but over a period of time, you're going to be consistently profitable. That's what we're going after. So what I advise you to do is do like I do sometimes. The worst thing you can do is to look at this net lit. You're looking at your net lit today and you go, oh my gosh, the market is down and man, I'm struggling. I don't even care what my net lit is, because am looking at I'm looking at the forest, right? These are my little individual trees in my forest, but I know I've gone to the analyze trade and I've looked at if we crash totally, then I'm going to be okay. So look at the forest first, kind of things like I'm down $778 today. Am I upset? Am I going to go and go, oh, Beth, we can't go to the Piggly Wiggly and get ribeye steaks today? No. Oh, now it said 1,100 down. Am I looking at that? A little bit, but I'm not focusing on it. I want you to focus on that. So what we're going to focus on is what the market is giving us today. So let's just look at what Mr. Market is doing today. Okay. So we see this little white line is the cash open. That is where we open today. All right. You see this little purple line. That is I believe, the overnight low. So what we have done is we have opened here, then we go down and we have crashed through. Now, I don't want to say crash, but we have gone down below the overnight low. So this tells you we are in a bearish day. We are under the hourly midband. You see the hourly midband is basically showing, where price is at the hour, and it's going down, down, down. We got little steps going down. Every hour, the little steps are going down. Then we see VWAP, value weighted average price, which is something a lot of the big boys watch. And I'm watching it as well, which basically our price is under VWAP, right? So then we see this little shaded area. Shaded area is what price did in the first 15 minutes of the day. What did price do within the first 15 minutes of the day? It had about a 10 to 12 point range, didn't it? 43.90 to 44.02 or so in there, 10, 12 point range. And then we have broken outside of that first 15-minute range, and now we're down. So what is AD doing? Advanced decline line. This is something that I'm watching all the time. So AD is negative 157. That's not crash mode. That's just, a good, down day. And what has AD been doing? Well, you see here, we were going up, 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 up. Now watch this. You see, this is kind of weird where we expect price, and you see I've got the little, what is that called? Crosshairs there. You see as AD was going up, what was price doing? It was going up there. and then AD was going up and price was going down. That's kind of strange. We expect price to follow AD, but in that instance, AD was going up where the market did not go up, and then AD starts to go down. Then it pops back up a little bit. It hits what? VWAP. VWAP at this point is resistance. And then what has AD done ever since? AD just kind of predicted exactly that, hey, we are going down. So we look at volume over here. You know, you've seen a lot of times that this volume line is just straight down. It's not so kind of today, is it? We see that little line that kind of tells us what volume is doing. And volume on the E-minis is kind of constant through here. See that? The line is kind of constant. And the good thing about this little volume indicator is it shows you the amount of bearish volume in red and the amount of bullish volume per 2-minute bar in green. Okay. So if anyone needs this, let me know. If you'd like to have that, we'll show it with you. Let me go to the chat. We need some Hank Williams, Marty Robbins, and Conway Twitty. Patsy. I love them all. Dang right. We can put that in there. Kentucky Headhunters. Oh, the Kentucky Headhunters are going to be in Oxford, Alabama coming up, which is kind of cool. Stacy says, for sure, I've lost more money trading in a fearful mindset. Yeah, Stacy, that's it. You can't trade fearful. You wake up scared to death that the market's going to, take all your money away. You're going to lose it anyway. So you can't do that. So don't just wake up and go, oh, the market's down, I'm going to panic. Now, y'all seen me panic. Y'all seen me. I mean, there's been days, and I'm talking to myself. I wake up and I go, oh, I need to buy a put because the market's going to go down. And then what do? You lose $500 on the put that you bought. You buy a humongous expensive put, and the market, goes back up. You make the worst mistakes at the worst time. So it is important. If you lose the money, don't lose the lesson. How many times do we say that? It's okay to lose the money. Don't lose the lesson. So we can only trade what the market tells us. Now, so we've given you a framework for the day, right? We've showed you the framework that I'm looking at. Now, here's what gives us a little bit of peace is we'll go to our volume profile and let's look at ES there. Now, for those of you that knew, don't worry, we're almost at the end of the month, and we're going to draw some new big green monsters. So when I show you these levels on big green monster, I want you to flip out and go, how do I do that? We're going to show you how to do that. Okay, does anything take us by surprise? No, because we drew these levels back in, what month is it? July. So we drew these at the 1st of July. Now, you would think that I drew these after the price started moving. No. We did this on the first day of July. So let's look and see what happens. So we see a lot of stuff happening around here at this 50% level. Y'all see that? Just a bunch of consolidation there. So this is what we call, when you see that 50% line, though that area between the 20 and the 80, this is a fair value for SPY. So then what happens? Well, SPY, just the next day, we have a gap opening down. And look where it opens. It opens at this 20% line and is now in a new 50% area of a fair value. So it's fairly priced here. It jumps through oversold and overbought and goes down to fairly priced again. Look where consolidation is. Consolidation is at the 50% line. Then what does price do? It becomes overbought, quickly oversold, and then back, see the little consolidation along the 20% line? How often do we see that? Then what does price do? It says, well, I guess I need to get back from being oversold and back into a fair value range. Notice a little consolidation here. Then what does price do? Price goes up. Where is it bumping its head? It's bumping its head at the top of fair price, trying to make a decision. And then yesterday, we see that price is overbought. So it's in the level above fair price. This is OB, overbought. And so are we surprised at all to see today a gap lower, Where does the gap begin? The gap begins at the 80% line. There it is. Goes down. And we are now heading back to where? 50% line. And with volume profile, would we at all be surprised to see a touch of the 200 simple moving average on a 30-minute, 10-day chart? No. Would we be surprised to see price come and hit the point of control on the volume profile? What is this little red line? That red line is the area, the price where most volume is traded over the last 10 days. This is where volume is comfortable. We wouldn't be surprised at all to see price pull back here. We wouldn't be at all surprised to see price pull and test the bottom of the fair value range, which also is at the 1 standard deviation down area here from the point of control. We wouldn't be surprised at all to see maybe some area of support down here in this area before then another gradual beat up to here. So we're just looking and seeing what the market gives us. Let's look at it on the ES. ES is a little bit different because it includes overnight prices. So it's going to be just a tad different, but let's look and see if it pretty much plays out with that as well. Absolutely. Look, same thing. So now price goes kind of to the top of the range. It's a little different than the SPY. Okay, kind of goes toward the top of the range and says, well, I don't want to be overbought, so let's get back down toward the 50% line. So price is, you say, oh man, we're down 0.91%, 1% on the day. Man, that's a big down move. No, it's not. It's in the fair price. Here is where ES is fairly priced. So we make our, decisions and things about what we're going to do, just kind of watching this. And so nobody needs to panic. So you wake up today, oh gosh, the market is down and I've got naked puts on. Oh, I need to close them because they're down. Look, the market's down and I've sold naked puts. Okay, so let's go to the monitor tab. Where are our naked puts? Here they are, micro short puts. I'm scared to open it. The market's down 1%. Okay, I lost $102. If I closed them all, I'd still make $36. You remember the one that I sold yesterday? Oh crap, I'm down $12.50. The overall position is up $36. Now, sure, I'm down $102 on the day, but I'm up $36 on this trade. Should I close all of my micros? Should you? You can still get a profit for that one. You still get a profit for that one. Those are profitable. Only the one I put on yesterday is not profitable, and it's only down by $12.50. So then you go to the trade tab, and let's just look and see how dangerous our micros are. Let's see. So let's see where we've got positions. Okay, so we've got some in the 35-day category. So we've got 35 days on these. So let's go see where our short puts are. Oh, wow. Got a ton of them, y'all. Look at this. That's at a 10 delta or an 8 delta. 9% probability of being in the money, 9% probability of being in the money, 8%, 8%. Am I going to close those? Crap, no. No. We're not going to close those. Right? We'll just let theta burn. Well, we got our 1, 2, or 1, 2, 1, 1, 1, 1, whatever trade that we got down here. We're going to close those 26%, 32%. No. No. So we're looking really, really good. All right, let's go to our 53 days or whatever it was, 52 days. Where are those at? Now, remember, we sold all of these at the 10 delta, 10% probability of being in the money. What are they today? So I sold it at a 10 delta. It's at 10.79. It's at 11.41. Am I going to close those? No. So before we wake up and say, oh, market down 1%, I got to close my short. No. Go and look at it at the trade tab, see what delta they're at. If you want some management on that, to say, hey, I'll close them if it gets to 2x loss. So if this thing gets to a P&L of negative 200, I'll close it. Do I have anything at negative 200? No, nothing at all. So now we've got a down market. Okay, so we can only trade what the market gives us. So what should I do today? What should I trade? Well, let's look. Let's go back to our charts. Okay. Market's down. It's right here. Could go right here, right? So I could, the best day to sell a put is on a down day. The best day, let me repeat that, the best day to sell puts is on a down day. I sell them all the time. So why don't we go here and let's go to MES. Where do I sell them? I go closest to 60 days without going over 60. And I usually go to the 10 delta or 10% probability of being the money. Let me be consistent. I go here. And what I sold yesterday for $17, I can now sell farther out of the money than I was yesterday. And I can collect a larger credit. Remember yesterday, didn't we sell this one? Let's see what we did yesterday. See if that's it. 726. Yep, yesterday we sold a 10 delta for 17.75. Check this out. This is cool. So on a down day, I can now sell a micro put. We sold the 38.40. Today I can sell the 37.90. So what is that? 50 points farther out of the money. And instead of collecting 17.75, I can collect, it went down a little bit. We can collect maybe 18.25. Well, let's do that. How much buying power does it take? 0. Why? Because I got all those hedges in place. So I can collect me $89 in premium. Now, you can't do this with fear. Oh my gosh, the market is down. So we just sold the 37.90. Okay. So you can't do that with fear. Fear will tear you up and you won't do the things that you know you should do. Yeah, but Bobby, what if the market goes down another 5-10%? I got you. But I don't know that. I'm not a soothsayer. I don't have that crystal ball that tells me that. So we sold this 37.90. All right. Where's the 37.90 on my chart? Let's just look for a second. Where is the 37.90? You don't even see it. ES, MES, same levels, right? Where is the 37.90 on my chart? Well, that's down. Let's see if we can find it. We'll have to crush this. Oh my gosh, we're going to crush this down to nothing, y'all. It's still not there. Jeez Louise, 37.90 is down. Oh, geez, it's still not there. Oh my gosh. It's down here. Hell, it's off the chart. Am I worried that price is going to go from here to here? No. Now, maybe if that was my only trade, I'd be upset. But what do I have? I have black swan hedges on. I got black swan hedges on. I've got hedges to protect me from catastrophic ruin down here. Okay, say you don't have protection. You don't have black swan hedge. Hold on a minute. Let me take some Milo's sugar-free sweet tea here from a red solo cup. What if you don't have those hedges? That's fine. Close this if it reaches a 2x loss. If you lose 200% on the one that you just saw. So what if that means I sold it for $90? So if I lost 200, that means I lost what? 2 times that? What's $180? That's when you can close it. Can you afford $180 on one short put? Sure. But you've got 90% plus probability of closing that for a profit. I don't say this enough. Maybe I should type it out. What do? Our general plan, y'all, as option traders is we sell premium. Right? We sell options. And the second thing we do it with the odds in our favor. Right? High probability trades. That's what we like. Then what do? Well, third thing we do is manage risk. Okay, I've got a black swan hedge on. I've got space strip trades on. I've got things that protect me to the downside. Okay, you don't have that. Okay, well, let's say that, what's your risk on this trade? You're going to manage risk by maybe closing it at a 2x loss. You watch it, see if it goes to a 2x loss, and you close it. But I don't want you to enter the trade going, oh, I think it's going to lose. I got to watch it every day. That's not what you do. I expect it to win. We just put on a trade that has a 90% plus probability of profit. Final thing we do, this is the part that's fun, right? We rinse and repeat. That's what we do. Sell premium, odds in our favor, high probability trade. Now, sometimes we buy options, don't we? We do. No doubt we do. But what do? We then will sell something against the loan that we purchased, the option that we purchased to finance the purchase of that option. All right, like what we're about to show right now. So the market is down today. So let's you and I take advantage of it. So we don't know if it's going down more. We don't know anything. So what we're going to do now is we're going to open up this. We're going to open up Tastyworks because it's easier to see. And what did we just say yesterday? When is the best time to put on a 1-1-1 trade? Y'all know, on a down day. So the market's down today. So we're going to put on a 1-1-1 trade. So we talked about legging into the trade, which you certainly can do. But on a good down day, you can put the whole thing on. So what we're going to do is we're going to buy options, and then we're going to sell an option to finance the purchase of the options that we buy. Y'all ready? Hold on. This is the 1-1-1 trade. So we're going to go closest to 45 days. So we'll go to the, we'll go 36. Could you do 53? Absolutely. So we'll go here. All right. So here we are. So what we want to do is a long put vertical. So we're going to buy options. So let's go here, long put vertical. And then we're going to make this thing 50 points wide. So we're going to buy the one closer to the money, and then we're going to sell one farther out in time. So that's 10, 20, 30, 40, 50 points wide. So that's a long put vertical. All right. Then we want to price this thing. We want to pay $10 for this. So this is $13.75. So to get that cheaper, I need to move those farther out of the money. So let's move that out of the money to a point that we get that to about, hold on, Bob, you're moving both of them. There you go. 43.10. There it is. Now we'll move them both out to a point that we want to get that to $10. We're still moving it out. There it is, $9.75. We could go up one. There it is, $10. So you buy that spread for $10, right? Then what do? Well, we don't want to pay $10 for this. So we want to find something that will finance the cost of a long put vertical. Now, where does this make money? A long put vertical makes money if the market goes down, right? So that's good. So now we want to go much farther out of the money, and we want to find one that we can sell for 20 bucks so that we can put this overall trade on for about a $10 credit. So right now it's a $10 debit. So let's go down to a point where we can find one that we can sell for $20. There she is. You go $39.90. Let's do the 4,000. So let's sell that one. Chaboom, chaboom. So now we can put this entire trade on for $10.50 net credit. Well, what does that look like? Let's see what it looks like. All right. And we'll click analysis. There we go. So what do we have? Now we have a trade that allows us to collect the amount of credit that we bring in on the trade, right? Regardless if price goes up or all the way down to, look this, y'all, 3,900. That's our break even is way down here. And what happens is this will offer us a little bit of a hedge on a downside move, as long as the downside move is not too quick. Because this T0 line, we've seen it on the Thinkorswim Analyze tab, will pick up over time. So I believe we have a date with the 4,500. So regardless what happens, I expect to make a profit on this trade. If we go here, 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 here over the next few days, just up and down and up and down, this trade is still going to create a hedge for us. Hey, get your game out here, guys. I'm in a session. So this will pop up over time and give us a nice maximum profit of $303 to the downside. All right, so what I want to do is actually increase the quantity on this, though. So right now it's a 1-1-1. So I want to increase the quantity to 2. All right. How much buying power is that going to take? $27.30. My maximum profit is 503. Now, if you are of the type that you're looking, it's got a 97% probability of profit. I like it. Gives me a little bit of short delta. Wow. and brings me in some positive theta. Now, a lot of you are going to look, I apologize for my kids, y'all, they're out of control. They go to school next week. We're going to have fun because all of them, including Fat Baby, are going to be in big school. So we won't have no more till school's out next year. So a lot of you may look at this and go, oh my gosh, Bobby, $19,498 is my maximum loss. Yeah, that's your maximum loss if SPY goes to where? Zero. Or I mean, the micros go to zero. The micros aren't going to zero. But some of you will look at this and go, I can't put that on. That's going to scare me. But look at the buying power efficiency it's taken. I've got on Black Swan hedges in this account. So it's saying, hey, man, we understand you're covered to the downside. We're going to take $27.30 of buying power for this. Now, I could do this in the SPY, but we saw yesterday that that's going to take about $4,000 of buying power. This is an advantage of span margin. I'm comfortable with span margin on futures, right, which allows me to use much less buying power. But span margin, keep in mind, can really fluctuate on you in big moves. So they can require more and more margin. So you still don't want to go, hey, man, I'm going to pop it up and do 50 contracts. Keep things kind of, conservative here. But this gives me a nice maximum profit of 501. Oh, heck, hold on a second. That's not right. It didn't include that one, and we got to make that one go up in quantity. Hold on. How do I do that? Go that one. Hold on. Quantity up. No, not those. Hold on. Here, let me go back to my table.
I think you have to unselect the 4250.
The 4250.
Yeah, so you click the 4250 to unselect it. It will keep only the top one highlighted.
Okay.
On your bottom left under the order tab.
Bottom
or that
left.
works too, I think.
Hold on a second. Or I can do, let's see, I can uncheck these, right? Then I could go and do, hold on. Do that and then go up one on quantity. That should do it too. Now we got it. 222. Now let's look and see what the thing looks like. Curve analysis. Two contracts. I'm pulling in credit of 1025. Net credit on that. Buying power is 33.90. Now it's a maximum profit of 603. Now maximum loss of $39,000 if it goes to zero. All right. Probability profit 96%. I like it. I like it a lot. Let's send that order. Oh, the strategy is not supported. Okay, so you can't do this on this one. So you got to put your debit spread in first over here, and then do your. So let's delete this leg. So remember, it's the 44,000, y'all. So I'll delete that. Now 22. So we'll send that for. That's working. Now let's go and try to do our 4,000, and it is for 20. And we'll sell two of those for 20. Failed there. And let's see, go to activity. So that one's failed. This one's still working. Just so y'all can see it, I can move that up maybe a quarter, a little bit here, and get it filled. So we're still doing it for now. Let's make sure everything worked and we're in the trade. Yep, no orders present, so we got filled on both of those. And we've got a nice little position on. And as Tom said yesterday, you really, what's the risk in this trade? The risk is price goes down past that short strike, right? So you can manage that separately. You can manage it as a whole trade, but I'm using this for a grind down market to give me a little bit of protection to the downside. So let's see, what were those strikes again? That was the 4250, 4300, 4000. Y'all help me remember that. Because what am I going to do? I'm going to do it in this account too. So we'll go trade, MES. We'll go to the 35 days, closest to 45. And I think we can do it as a full order here. So what do we say? The 4,300. 4,300 there. And 4,250. See if I can do 4,250. Yep. Now look, now here's, it's kind of interesting, right? So I've already got that as a position on there. So we're buying, I should buy this and sell that one. Well, I mean, you could do that, but it kind of messes my other stuff up. I don't like layering those positions like that. So why don't we do this? Why don't we buy the 43.10? You don't have to be exactly where it is. 43.10, and then we'll go 10, 20, 30, 40, 50 there, right? We'll sell that one. So that is a $10 debit. Good. So then let's look for the one that was, I think, 4,000 or so. That brought us in a $20, 1975. So, you know, we can move it up a little bit. We could go to the 40.10. All right. Put this on for a 1075. Then we can change our contracts to 2, -2, -2. All right. 1075 credit. Confirm and send. And that's taken, says $818 in buying power here. Let's put that on and let that work for a little bit. All right, so you can actually work that trade as a full trade in Thinkorswim. All right, so there we go. We've got that in. Now, what else could you do on a down day? What else could you do on a down day? Well, remember that we've got Black Swan hedges that are working as well, right? So I've got a Black Swan hedge where in ES where I've sold 3, and I'm waiting to fill the 5 loans for $1.80. Now, say you don't have that. Say you don't have, say you've got 4 fully formed 3-5 tranches of the Black Swan hedge. For those of you who are new, if you don't know the Black Swan hedge, trust me, we'll do a class just on it to make sure that you're up to date. But basically what we do is we have Black Swan hedges, which are in increments of 3 shorts to 5 longs. You can do it in the micros. You can do it in ES. If you got a huge account, you can do it in SPX, I guess. But we do them in, we do these in, here it is. We bought 4 complete tranches, right, of the Black Swan hedge. Now, so far, we made $80 on that today. We expect that to be a full loser over time. But what it allows us to do is it allows us to sell other puts against this while having this humongous hedge in place, right? We got this great hedge in place. Let's look at that for a second. Let's look at the hedge. Go to ES, go to Hedge simulations. So it just shows our positions. All right. I say hide simulations. There we go. So let's go to, we've got groups over here. So let's see what our Black Swan hedge looks like with 4 complete tranches. Let's see what this thing looks like. Okay. Let's pull this down so we can see the graph. Ta-da! Now, why am I able to sell short puts on the micros? Well, because in the ES, which is a much bigger product than the micros are 1/10 the size of ES. What happens is if we have a huge market drop, let's see where that is. Where are our price levels? Let's say where are we got filled. Let's move this back up to 20% down so we can move that price slice. So this is how I set it up. I do 7 price slices, and a little different than carrying the super trader. I like to see what happens if price goes up 5%, 10%, or 15%. I like to see what happens if it goes down 5, 12, and 20. So I'm always looking at what is my risk at 20% down. 20% down would be a pretty good size crash. what the crash of 87, wasn't that down like 25, 26%? The multiple day crash down in March of 2020, I believe, was like 35% down. That's why I sometimes look at that. So on this full tranche of 12 short puts and 20 long puts that we purchased, if the market were to go down 20%, volatility stepped up to what we would think would be around between 62 and 80%, then my portfolio, well, this particular hedge would be at $14,000. Isn't that cool? So let's see now what would happen with all of our Black Swan hedges. So we'll go to single symbol. So the single symbol that we're looking at would be our ES trades. And now we're going to go to all groups. If you have any questions on this, we can go through the analyze tab, but you need to be able to analyze your trades and analyze your risk. All right. So now I've got all of my positions, but I want to take out my space trip trades. I just want y'all to see the ES Black Swan hedges. So let's take out, those are all 3, 5, 3, 5, 3, 5s, 12, 20s. So I don't need to take those out. And here are the space trip trades, 10, 10, 7, 7. So let's take that out. Take that out. Let's take that out and that out. And then we're going to take out the 10, 10, 6, 6, which is another space trip trade. 3 and 4. All right. So let's just say the only thing you're trading is a Black Swan hedge. Can you do that? Yeah, man. If you really want to be safe, it's a great trade. And you say, man, I ain't gonna trade nothing else, man. Bobby, I am on the Black Swan hedge. We're gonna put these on for credits. Man, I'm gonna live the life. Okay. So the $50,000 account, right? If we have a 20% down move and you're just trading the Black Swan hedge, then you, my friend, are going to make between $48,000 to $69,000 on a 20% crash in the market. On a hedge that you are putting on for free. Putting it on for free, Bobby. What the crap are you talking about? Well, I did buy the first tranche, no doubt about it. But from now on, every one of those that I put on, I'm going to do for a credit. So keep in mind, even with that huge protection, I've still got a short put that has not been, let's take out one of the shorts and see how strong it would be. So there's 12, 20, 3, 5, 3, 5, 3, 5. All of those are matched. There's a 3, 5, and here's the 3. I've got a naked 3 puts in here that have not been matched with the 5 loans. I'm waiting to where I can put that on for an overall credit so that hedge will be on for free. But let's say you don't have that on. Let's say you just got a couple of Black Swan hedges. Without that 3, now check what happens to my risk graph. So now on a, let me draw it out to the side so y'all can see. I want you to focus right in here. Here's where we see what the profit would be on various levels. So then we'll go back and we'll say, okay, so if we have a 20% drop and you've got on 5 or 6 Black Swan hedges, friend de la friend, you are up between, keep watching here, you would be up 75,000 to 107,000. Now, so if you're only trading the Black Swan hedge, you're doing pretty good. Now, keep in mind, as you put these on for, you can use it as an income trade. So I don't have to fill that one at $1.80. I could fill it for $1.35 and collect much more credit, right? So that if the market goes up, you're not worried either. So the only thing that worries you is on a grind down here. So if a grind down, not a crash, happens and you go down 20%, the vol's not going to lift up to 63 to 78%. So that's why we have to put in trades that are called what? That's why we put in the 111 trade. So let's show you what that looks like. Well, let's first of all show you what the space trip trades look like. So we'll go to 1 expiration. I only do the vol steps here, 4 vol steps, and change this to 15 to get a feel of a crash. If I'm just looking at the trade and how it's doing on a regular basis, then I'm going here, and I just want to look at it in the 1 expiration. So now let's go, we're looking at single symbol. So now let's go to looking at, let me click everything here. All right, so now since we've got things grouped, we can really see how individual trades are doing. So let's see how our space trip trade's doing. So our space trip trade is meant to give us a grind down protection, right? So if the market starts going down, we will have protection within this tent. Now, the only way that we could lose on this is if price, pops down quickly, goes down here, and then you see your T0 line, which is today's date, then you're down, $1,600 on the trade. Then you go down here and you're down $3,900. Now you go down 20 and you're down $4,600 on this trade. But guess what? Do you care? No. Why? Because you've got the Black Swan hedges protecting you down here. So this one really, doesn't have that downside risk for me. And what we're expecting to happen is as time goes down, this is a positive theta trade, and we expect this T0 line. Remember, this is the expiration line, right? At October 16th, that's the expiration line. So what we're expecting this to do is to raise up as days and time passes. So let's watch what happens. Watch the purple line, folks, because this is cool. So as days pass and time passes, watch our little purple line start raising up. So by the time we're, let's say a month from today, month and 2 days from today, and if price just kind of skimmers around, up here and does what it does, see how we've got this nice little hump developing? So check this out. Then when you're down, let's see what my 5% is. 5% down is the 41.55. This is 5% down. So then if the market, suddenly goes down 5% in a day, check it out. You're up $833. So you see what we're doing? We're developing a hedge to not only help us during a crash, but a position that will help us in the event of a slow grind down market. So you start layering all these things together and all these different trades, and you build up something that's pretty doggone awesome. All right, so let's go back to the monitor tab, and now let's look. So what we've been saying is, though, that this thing, is possible max profit of 10,450. Watch that, 10,450. If at expiration we are in here, we'll never reach that because we will close this thing way before that. But I want you to see something that I kind of like, this 111 trade that we've been doing, even though it's smaller. I like it because let's see what it's doing today. It's down $19 on a big down move, right? Against that short put, but we've got that long put spread. So we're still up $37.50 on that. It's giving us nice theta, not a lot of negative vega. We're up 35% on the trade. So we just put on another one. So let's do that. So unallocated, we're grouping our trades. So we want to take these two and put those in the right category. Remember, this is the one we sold yesterday. And so we want to put him, right click, move to group, and we're going to move him to the micro short puts. Boom. And we got another one that we sold today. So we want to put him in the right place. So right click, move to group, put him in the micro short puts. Beautiful. And then we've got this 222. So let's click on it. Click there, hold down the control key, click left click there, left click there, right click, move to group, and we're going to add a group. And I'm going to call this 111 second. Okay, so I know it's the second group of the 111 trade that we've got. So let's put that on there. So that should move it out of here to the unallocated. So now we got everything allocated, right? So we got this. Let's go back to our analyze.
I had a question.
Yeah.
So it might be a pretty simple one, but is it every time you make a new trade, whether it's a 111 or black swan, you put it in a new group, or do you ever just put all the 111s in a single group?
Yeah, you could do it. You could put it in a single group, just to check on them. I like to see the individual trades. So it's easier for me to put them in, separate things so that I can kind of see how that trade is looking on that analyze tab. What I want y'all to get in the habit of, even if you're trading at Tasty Works, I want you to get on the habit of using the analyze trade in Thinkorswim. So yeah, I like doing it because it just makes it so easy when we go to the Analyze tab. What's this? I'll go at one expiration. So here, hide simulation. So now, since you're doing a trade that is not an ES trade, we've got that in the micros. You got to go portfolio beta weighted. Okay. And then which group are we going to look at? Well, let's look at our first 111 trade. So 111, where's he at? But yeah, you could lump them all together if you want to, no doubt. All right, so let's make sure that we look at this trade as of today. All right, now, so let's kind of move her down and look at it. Now, you can tell it's not as big of a hump here, but the trade effectively does the same thing. So let's see, let's go to here, our price slices. If you guys have any trouble setting up your price slices, let me know. We can do a one-on-one, get you all set up. We may even just do a little section on adding price slices here. Here's the way I do it. But you see that this 0 line shows you current price. So right now, this is giving me 0.32 deltas. It's giving me positive theta, a little negative vega. And the profit on the open trade right now is 37.58. It's 42.60. So that moves around a lot. And we're down 16.40 today. Tells you the buying power requirement for the trade. But the same thing happens with this, right? The same thing happens. Watch as time goes by, we get a nice little profit hump to the downside. So right now, if you go down, if we go down 5%, what happens? If the market goes to down 5%, we're down $106. See that over here? Over here. Follow that. So market goes down to that 5% line, we're down $111. Dang it. That's terrible, but it's not really terrible because what happens is we want this trade to develop, right, over several days. So what if we get a month out, and then let's look at see what happens on a month on a 1 or on a 5% down. So this is on August 27th, how it would look. So now watch what happens. 41.56 is our 5% down line. See it there? 41.56 is down 5%. So then if on one day you have a gap down to 5% in just a month, people, we're up $450.50. Well, Bobby, what if it goes down here even farther? You're still up $374. Keep in mind, this is a 12% drop here, right? So the 12% drop, how much are you down? You're down $221. So what starts kicking in here? Black Swan hedges. But so you can still get about a 10% down. You're still going to be about what? Between these, maybe there's 10% down. 10% down the mark. How many of those do we have? Not a lot. But if it happens, you're up $342 on a very, very small trade. But we've got two of these, right? So as time goes on, let's see what happens. So let's go a little bit more. These are 45-day trades. So let's just take it out a little bit. Look at that, y'all. So within just a little bit on 9/1, when this thing expires, yeah. So let's say you're on 8/31. So it expires, 8/31/9/1. So then what happens? So you get a price down. Follow the little purple line here. You get a price that is down here. You're still at 504. You're almost at 12% down. Let's see what happens at 12%. It looks like your break even is just down below 12% down, right where my little price slice is. Look at this. If you're down to the 12% line, and the 12% down is 38.48, which is right here. Look at that little box on the left. You get a 12% down move at expiration, you're at $47.75. And if you let it expire the next day, you're going to take $103 on the trade. Isn't that beautiful? How that little thing just kind of filled up. So any day you get a down day, what a Great day to put this trade on. But Bobby, I'm scared of selling that put. That's going to make me lose down here. Look, Bobby, what if we go all the way down here? I'm down $12,000. Yeah, but you're up $70,000 on your Black Swan hedge. Y'all see how this works? And it's beautiful if you think about it. It's really beautiful how the whole thing just kind of works together. So what is, and we ain't even talked about AIM, for the love of the Lord. I mean, we know AIM's down today, right? Market's down, AIM's down. Am I getting any take action signals on our automatic spreadsheet that tells me to do anything? Nope, nothing to do. Just sit back and go play with the goats and the donkeys. Go milk the chickens and collect the goat eggs. It's all I got to do for the rest of the day. Take me a nap, enjoy life, play with the kids, yell and scream, eat a ribeye steak that I'm going to buy from Piggly Wiggly later today. You see how cool this is? But Bobby, you're down like $700 today, maybe over 1,000. I don't care. What do I care? I'm looking at my trades. I'm managing them. You're down $707. Dang it. Does that hurt? Well, maybe for a day, but my trades are totally safe. My trades are totally safe. All right, good session today, y'all. Any questions before we cut it off for the day? Glad to have our new folks, Short Ball and Joe and Jason's just been a delight. Now, Jason, do we want to, or is it just going to be me or you? Or do you think any trader nerds would be liking what we're about to see when we stay together?
Yeah, let's just do you and me first, because my biggest fear is if I have to debug things, I don't want to waste other people's time, but we could still record this session and, keep the parts that are important to keep things consistent.
Okay,
consolidated.
that'll be great. We'll do that. Jason's doing a lot of work, y'all, on getting our little BAME system and name systems automated, which is going to be really, really cool. So he's a really smart dude. I'm just an old country boy, living on a little farm 2 miles from the Alabama line, sitting in my one underwear, sipping sweet tea from a red Solo cup and a Spam hand. All right, any questions? All right, I'm going to log out so we can stop the recording.